You have seen the headlines: AI predicts Bitcoin will hit $200,000, AI model says Ethereum is going to crash, AI correctly called the last crypto bull run, and every time you read one of these headlines you probably wonder, is this actually real? Can artificial intelligence genuinely predict where crypto prices are going? Or is this just another way to get clicks and sell courses? In this video I am going to give you the honest and complete truth about AI and crypto price prediction. No hype, no false promises, just the real facts backed by actual research. By the end of this video you will know exactly what AI can and cannot do when it comes to predicting crypto prices, and most importantly how you can use these tools wisely to make better investment decisions. Let's get into it. Before we talk about whether AI can predict crypto prices, we need to understand what makes the crypto market so incredibly difficult to predict in the first place. The crypto market is unlike any other financial market in the world. Stock markets have company earnings, revenue reports, and economic data that analysts can study. Commodity markets respond to supply and demand fundamentals like weather, production, and consumption. But crypto moves based on an almost completely unpredictable combination of factors. The first factor is human emotion. Fear and greed drive crypto prices more than any fundamental data. When Bitcoin drops 20% in a day, it is usually because millions of people panicked and sold at the same time. When it pumps 30% overnight, it is often because of pure excitement and FOMO, which stands for fear of missing out. No AI model in the world can perfectly predict human emotion. The second factor is news and black swan events. A single tweet from an influential person, a surprise government regulation, an exchange hack, or a geopolitical crisis can send prices crashing or surging within minutes. These events are completely unpredictable by definition. The third factor is whale manipulation. A single wallet holding billions of dollars in crypto can move the entire market by making large trades. These whale movements are often invisible until after they happen. The fourth factor is social media and meme culture. Dogecoin became one of the top 10 cryptocurrencies in the world largely because of Reddit posts and celebrity tweets. No traditional financial model, AI or otherwise, was designed to handle this kind of irrational market behavior. This is the environment that AI must try to predict, and it is the most chaotic financial environment in human history. Now let's talk about what AI actually does when it tries to predict crypto prices, because understanding the technology will help you understand both its strengths and its limitations. Modern AI crypto prediction systems use several different approaches. The first approach is machine learning with historical price data. These systems analyze years of price charts, trading volumes, and market patterns to identify recurring signals, for example certain candlestick patterns, volume spikes, or moving average crossovers have historically preceded price movements. AI can scan thousands of coins simultaneously and identify these patterns far faster than any human analyst. The second approach is natural language processing and sentiment analysis. These AI systems scan social media platforms like Twitter and Reddit, news websites, crypto forums, and even government announcements in real time. They analyze the language being used. Are people excited or scared? Are there more positive or negative words being used about a coin? This sentiment data is then combined with price data to make predictions. Research has shown that a 2024 survey of algorithms found that word embedding sentiment models achieved around 89% accuracy in predicting Bitcoin direction. However, these same models still struggle to predict exact price levels. The third approach is on-chain data analysis. AI systems can analyze blockchain data directly, looking at wallet movements, exchange inflows and outflows, whale activity, and network usage patterns. When large amounts of Bitcoin move from cold storage to exchanges, it often signals that whales are preparing to sell. AI can detect these patterns in real time. The fourth approach is multi-dimensional analysis, combining all of the above simultaneously. The most advanced AI systems in 2026 combine price data, sentiment analysis, on-chain metrics, and macroeconomic indicators all at once, processing millions of data points every second. Now here is the critical question: how accurate is AI at predicting crypto prices? And the honest answer might surprise you. According to research on AI crypto forecasting, top platforms achieve directional accuracy of around 55 to 65%. This means that when AI predicts whether a coin will go up or down, it is right about 55 to 65% of the time. That might not sound impressive, but consider this: a coin flip gives you 50% accuracy, so AI is meaningfully better than random chance. But it is far from perfect. A CNN machine learning model tested on crypto data achieved 91% accuracy on crypto direction in controlled research conditions. That sounds amazing, but here is the critical distinction: direction accuracy and price accuracy are completely different things. Knowing that Bitcoin will probably go up tomorrow is very different from knowing that it will go up by exactly 3.5%. The gap between direction and magnitude is where most AI crypto prediction tools fall short. In 2026, 5 of the most powerful AI models on the planet were asked to predict Bitcoin prices for 2026 and 2027. The consensus prediction across multiple major AI systems was approximately $119,000, while one model predicted as high as $210,000. But as the researcher who conducted this experiment noted, every model he has ever built has eventually failed, and whether AI can reliably predict crypto prices remains genuinely unknown even to the experts building these systems. Now let's talk about what AI genuinely cannot predict, because this is where most people get misled. The first thing AI cannot predict is black swan events. A black swan event is a sudden unexpected occurrence that nobody anticipated. The FTX collapse in November 2022, the COVID crash in March 2020, the Luna collapse in May 2022. None of these were predicted by any AI system. None were predicted by any human analyst either. By definition, black swan events are unknowable in advance, and they have caused some of the biggest single-day crashes in crypto history. The second thing AI cannot predict is regulatory surprises. When China banned Bitcoin mining in 2021, the price crashed over 50% in weeks. When the SEC approved Bitcoin ETFs in January 2024, the price surged dramatically. No AI model predicted either of these regulatory decisions with meaningful advance notice. The third thing AI cannot predict is social media virality. When a famous person tweets about a coin at 2 a.m. on a Saturday, that coin can pump 40% within minutes. No AI system can predict what a specific person will tweet or which post will go viral and move markets. The fourth thing AI cannot predict is market manipulation. Pump and dump schemes, wash trading on exchanges, and coordinated whale movements are designed to be invisible and confusing. They inject false signals that cause even the best AI systems to make wrong predictions. As research has shown, accuracy drops significantly in environments with false signals or misleading data. So if AI cannot perfectly predict crypto prices, what can you actually use it for? And the answer is quite a lot if you use it correctly. The first genuine use of AI in crypto is trend identification. Even if AI cannot tell you the exact price of Bitcoin next week, it can tell you whether the overall trend is bullish or bearish with meaningful accuracy. AI-driven trend analysis is now used by professional trading firms, hedge funds, and institutional investors to inform their overall market positioning. The second genuine use is sentiment monitoring. AI tools that scan social media and news in real time can give you an edge in understanding market mood before it shows up in price. If negative sentiment about a specific coin spikes dramatically before the price drops, an AI sentiment tool can alert you to reduce your position. The third genuine use is on-chain analytics. AI systems that monitor blockchain data can detect early warning signs of trouble. If large amounts of a coin are suddenly moving to exchanges, if active wallet addresses are declining, or if developer activity on a project is falling, these are important signals that AI can surface much faster than human analysis. The fourth genuine use is portfolio risk management. AI tools can continuously monitor your entire crypto portfolio and alert you when your risk exposure changes significantly. When correlations between your assets increase, or when market conditions shift in ways that require rebalancing. The fifth genuine use is pattern recognition across thousands of coins. No human can monitor 10,000 cryptocurrencies simultaneously. AI can, and it can surface unusual patterns, volume anomalies, and technical setups across the entire crypto market in real time. In 2026, there are several AI-powered tools that serious crypto investors are actually using. Let's look at the most important categories. The first category is AI trading bots. These are automated systems that execute trades based on AI-generated signals. They can operate 24 hours a day, 7 days a week without human emotion interfering with decisions. Research has shown that AI-driven trading strategies achieved 1,640% returns from 2018 to 2024. However, this figure represents the best performing strategies under ideal conditions, and most AI trading bots do not achieve these results for average users. The second category is AI sentiment analysis platforms, tools that aggregate and analyze social media sentiment, news sentiment, and on-chain sentiment in real time. These are genuinely useful for understanding market mood and identifying when sentiment is reaching extreme levels that historically precede reversals. The third category is on-chain AI analytics platforms. These tools use AI to process blockchain data and surface meaningful signals about whale activity, exchange flows, and network health. The fourth category is AI price prediction platforms. These are the most hyped and the most misunderstood. They provide price targets and predictions for thousands of coins, but as we have established, the accuracy of exact price predictions is limited. Use these as one input among many and never as your sole source of decision making. The fifth category is AI portfolio managers. These systems use AI to suggest optimal portfolio allocations based on your risk tolerance, time horizon, and market conditions. They rebalance automatically when conditions change. Now I want to address the elephant in the room, which is the crypto prediction websites you see constantly promoted on social media. You know the ones. They show a coin with a dramatic chart and a bold price target. Buy this coin now, AI predicts 10,000% gains. These websites are almost always either completely inaccurate, powered by very basic algorithms with no real edge, or deliberately misleading to get you to click on affiliate links. Here is how to tell the difference between a legitimate AI crypto tool and a scam prediction site. Legitimate tools show you their methodology. They explain how their AI works, what data it uses, and what its historical accuracy has been. Scam sites just show you dramatic price targets with no explanation. Legitimate tools acknowledge uncertainty. They give you probability ranges and confidence intervals and not single price targets presented as certainties. Scam sites tell you a coin will definitely hit a specific price. Legitimate tools are transparent about their limitations and tell you what their AI cannot do. Scam sites only talk about their wins and hide their failures. Legitimate tools have verifiable track records and publish their prediction history so you can assess their accuracy over time. Scam sites only show their correct calls. And perhaps most importantly, legitimate tools do not promise guaranteed returns or tell you to invest large amounts based solely on their predictions. If any AI prediction tool promises you guaranteed crypto profits, it is a scam, no exceptions. Let me give you the most important framework for using AI in your crypto investing in 2026. Think of AI as a very powerful research assistant and not as an oracle. An oracle tells you the future with certainty. A research assistant helps you process information faster and make better informed decisions. The best crypto investors in 2026 are using AI in the following way. First, they use AI sentiment tools to monitor the overall market mood and identify when fear or greed is reaching extreme levels. Extreme fear has historically been a buying opportunity and extreme greed has historically been a warning sign. Second, they use on-chain AI analytics to monitor the health of their specific holdings. Are whales accumulating or distributing? Is network usage growing or declining? Are developers still active on the project? Third, they use AI pattern recognition to identify technical setups across a wide range of coins, not to get exact price targets but to identify coins worth doing deeper research on. Fourth, they combine all of these AI signals with their own fundamental research. Do I understand what this project does? Is there real demand for it? Who is building it and what is their track record? Fifth, and most importantly, they use proper risk management regardless of what any AI tells them. They never invest more than they can afford to lose. They diversify across multiple assets. They have stop losses in place and they never let any prediction tool, AI or human, override their own judgment and risk management rules. So let's answer the question we started with. Can AI predict crypto prices? The honest answer is this: AI can identify trends and directions with meaningful accuracy, but it cannot predict exact prices with reliability. AI can process massive amounts of data faster than any human, but it cannot predict black swan events, regulatory surprises, or social media virality. AI is a powerful tool that gives serious investors a real edge when used correctly, but it is not a crystal ball, and anyone who tells you otherwise is either uninformed or trying to sell you something. The AI crypto prediction market is projected to grow from $5.1 billion in 2025 to $55.2 billion by 2035. This tells you that these tools are becoming more sophisticated every year, but the fundamental truth will not change. No AI model will ever predict crypto prices with complete accuracy because no model can predict the full complexity of human behavior, global events, and market manipulation that drives this extraordinary market. Use AI as a tool, use your own judgment as the guide, and always remember that in crypto risk management is more important than prediction. If this video gave you clarity on AI and crypto price prediction, please hit the like button and subscribe to the Crypto Skill for more videos like this. Drop a comment below and tell me, do you use any AI tools for your crypto research? I want to know.